In this video, I'm going to talk through my thought process behind trading Canada Resources today. The stock ticker is CAE. Here's the intraday view, and it was on a tear. It's about 3 bags from the open to the high of the day, and it's still trading for today, but I really don't think there's any opportunities left in it. So I'm going to talk through what I saw and what the potential was, even though I called on really late to the stock. So real briefly, I'm going to go over the history of it as well, just very briefly. And real quick, I'm not a financial advisor, so please don't take anything I say as financial advice. It's not a recommendation to buy or sell this stock either. Now, on the 2nd of March, this stock pumped. You can see there was absolutely no liquidity. If we zoom out, there is no volume on this stock for like 3 years at least. So, on this day that it pumped, that was on the back of rock chip results. Gold rock chip results. And for those of you who trade micros and know anything about gold results, rock chips mean sweet fuck all. So here's the result of a stock that was sitting at around 9 million market cap, got rock chips. It manages to pump on absolutely low liquidity and come back down to reality. And you can see the difference in volume today compared to then, 43 mil versus 250 roughly million. So let's get into the trade. I caught this stock very late. I came in at around 8.5 cents here. I opened the announcement, and the first thing my eyes were drawn to was this part here, this first dot point. Significant copper intercepts. I didn't read the rest of that sentence. I didn't need to. I was in a rush, man. I had to get my trade on, and I had to justify what I was buying. So I saw 8.2 meters at 2.3%. Oh, fuck. That's amazing. 66 meters at nearly 2%, 118 at 1.99. I was basically frothing out the mouth at this point. And then I saw there was a bit of gold and not much there, and a little bit of silver for just a bit of fun. And then here we go, 28 meters to 110. Oh shit, this is at surface level. We've basically hit a micro cap trader's wet dream. A stock that's somewhere in the 10 mil market cap range, and when I caught onto it, it was probably around 24 million market cap. I saw this and I thought, shit, this is going to about maybe 70 to 80 mil market cap at the absolute bottom end. Does it get there today? Yeah, probably not. Does it get there tomorrow? Most definitely. So that was my thought process there. So I managed to just market execute a trade at 8.6 and 8.7 and rode it to about 9.9 right before the 10-cent wall got taken. Now, even if those results were real, and these are real, but they're historical, that's kind of the thing that I missed. But even if these were real results, like current drill results, I'd still sell and look at buying back at 9.2 roughly. 9.2 is kind of the pullback target. But then I kind of saw how rapid the selling was, and it spooked me a little bit to the point where I went, okay, this is a little bit too much. 8.5 on a pullback. I know, judging based on this move here, 8.5 seems reasonable. But for something that had results like that, I would never have really expected a pullback that large. 9.2 would kind of be the level that I'd be looking for, and that's the typical sort of pullback point from a 10-cent rally. And by the way, I find typically when a stock rallies to about 8.5 cents, especially if it's bagging, 8.5, usually it's a magnet to 10 cents. Once it gets to that level, it's almost always a 10-cent target. So that's my trade for my first trade, basically. And once it pulled back, I thought, all right, I've got to go back and have a look at this. And then I spotted previously from the Canada project area. And I was like, okay, right, something that kind of explains that. Now, the reason this pumped was probably because these grades looked so phenomenal. But historically speaking, when it comes to speculative trading, spec stocks, historical grades mean effectively nothing, right? It doesn't matter what you drill, you know, there's historical grades of gold and you're drilling for it. Fantastic. It's historical, you know, they probably had shitty old methods and they probably had terrible ways of calculating the grades. I don't know if these are historical grades from like the 1920s, right? I didn't have time to look at this and read through it and scroll down and look, I'm sure it's great, but historical grades really do suck. I can't emphasize enough how much historical grades suck in general as a news announcement. If these were actual copper hits, this would be mooning. So based on that, after finding that out, it was about waiting for the trade. Now, there's really nothing going sideways, or it's trending down. But this is where things start to change. It's not so much at this point in time. This is a nice little sort of move up, high volume seller. And then this is effectively what I'm looking for. This is some seriously tight consolidation. Now you might be thinking, well, there's no real volumes coming through, and that's perfectly fine. When a stock rallies from 3.5 cents to 10 cents, has a pullback to 8 cents, right? Think of how big of a pullback that is, or rather how small of a pullback that is. It's fucking minuscule. So when a stock consolidates at its highs, and I've talked about this so many times, pump consolidate comes with what? A pump, right? So it is here at this volume bar, not even a volume bar, but in fact this candle here at 8.5, 8.6, that's where I effectively just marketed in. I thought, right, this is exactly what I want. So the idea behind this trade is when it goes sideways, so it's stopped its little downward trend momentum. The entry isn't by default here because it's broken this down channel here. I don't think that's a very valid entry. It doesn't really tell you much except that someone bought a stock, and so what? There's a little bit of a move on pretty insignificant volumes. The story here that I like is that it's gone sideways. Now the idea behind this sideways move is that there's no more sell pressure. That's the idea. There is, I guess, a far safer trade when it's consolidating sideways at the highs when there's no more sell pressure. This could be mistaken for just a dead cat bounce and just go back down. So I don't like that play. I don't like just, this little shitty trend line gets broken, buying in here, and then a lot of the times it'll just be a dead cat and just flop down anyway. This, I find, is a substantially safer trade. And that's consolidating at the highs. So getting the entry at around 8.6, I think it might have been 8.7 as well. But that's effectively what I'm looking for, is the lack of sell pressure. So can like another 4 million shares be sold into by one person? Yeah, look, it can absolutely just collapse. That can certainly happen. But the idea is you've got a level here at 8.3, a bit of a horizontal, and that's kind of the stop range, right? The stop loss would be just maybe a tick under this level here, this horizontal here. And that's the risk to reward, is getting in and then targeting 9 cents again, 9.9. That is always the trade. Now I did end up bailing most of my shares at 9.6. I got spooked like a little bitch because I was watching the order book like an idiot. I shouldn't be watching the order book, after the first half hour of the day, but got spooked here. The opportunity was here. So in hindsight, could have been a better trade, but I felt justified at the time, particularly knowing what I knew about the historical grades, that they in fact were historical. So unfortunately, I did get spooked a little bit too soon, but I don't feel too bad about it because it came back down again. Again, we end up having a bit of a trend line. This is a downswing that occurred. And I thought, surely, after this high volume puke here, this candle here with this monstrous sell volume, that usually indicates that this thing is just dead. It's dead in the water. But there was another trade, and unfortunately I didn't have access to shorting this stock, but as you can see, there was another down channel similar to this down channel here. But the fascinating thing about this down channel is that it didn't keep going. There was actually some sideways action. It ended up grinding sideways. And I spotted that and went, okay, that's kind of interesting. I was expecting this to keep selling down because, hey, historical grades. But I ended up getting 8.7 on the fact that the sell pressure had just stopped. So what I saw was another consolidation, except instead of the consolidation being at this kind of very tight range, or rather this tight range, that it was just maybe a couple of pips higher. And I thought, okay, well, I'll buy at 8.7. And then came the order book. Thankfully, I was watching the order book this time because I saw repeat sellers at 9.1. There was a big buyer that stepped up at 9 cents. I think it was about 2 million shares, roughly, maybe 1.9. And people were jumping in front of that at 9.1 on the bid, but the bid kept getting slapped. I think it ended up going to like 9.2, and then it just got instantly reloaded with 500,000 shares at 9.2, 9.1. And that constant reload of buying and then getting smashed was my signal to get out. So I got out half at 9.1, the other half at 9.0 as the 9.0 wall was getting smashed down. And that was pretty much it. That was the trade for the day, and that was pretty much confirming that this was done, was when that 9 cent wall got hit. It made an attempt to again do this kind of move with a swing to the upside, but my confidence in that this would swing again was basically like 5%. The likelihood of this swinging back up to these levels here with these kind of, people stuck in the stock, there's probably a lot of bag holders here. The likelihood of that happening was extremely low. It just wasn't going to happen. I was willing to give it a chance because the risk to reward was there. To me, it was clearly defined when the sell pressure had stopped and it was trending sideways. I had a stop at around 8.4. So to me, 8.7 to 8.4, worth the risk in order to see this sort of moonshot, and hopefully people were going to, I don't know, maybe think that the historical grades were just fantastic or some shit. I don't know. Look, the grades were fantastic, but they just weren't real. So back down, we've now got effectively a new trend line, and that's, if I can draw straight, it's basically that. It's effectively dead for the day, and that was the final move that really confirmed it was this higher volume sell-off that happened. And that's really the trade for today. So despite actually catching this really late into the pump, there were still several opportunities that were identified, and it really was about managing the risk. It wasn't so much about controlling the profitability and setting targets, right? It wasn't just about, hey, I'm going to buy here at 8.7 and then my sell target's 9.9, or my stop loss is going to be here at 8.4, right? It's not a binary situation. It's just not like, it's not like it pumps here and then I wait for it to come back and hit my stop loss at 8.4. That's not really how it works. This momentum had to be sustained. If it wasn't sustained, if it failed, it's like, right, take profits where it can, because clearly once that 9 cent wall was gone and once those reloaders showed up, it was dead. It was simply dead. The buyer pressure didn't continue. So that's kind of the thought process behind my trades for today. Will this stock end up being significant in the coming weeks? Probably. If these guys end up drilling like they seem to suggest they will in the announcement, then yeah, I'll give this stock maybe 2-3 weeks to sell off and come down. So if I bring up the daily chart, if this manages to sell off over the coming weeks to, I don't know, maybe like in the 5 cent range, 4 cent range, yeah, fantastic. I'll give it time to sell off and then buy it for a swing, because, if these guys are competent and know what they're doing and they hit the right areas and the grades are actually real, then yeah, there's an opportunity to pump to the upside. I think it'll definitely clear 15 cents, almost with like 99% certainty. If these grades are replicated, I'm almost certain that it clears 15 cents without problem. So that's my thinking behind the trades for today. It was a bit messy. I got in a bit late. I got a bit fucked around with the news announcement and not reading it correctly, but that's kind of my fault. Still managed to turn it into a profitable trade, but you can see how the different type of thinking comes along when you find out this is a historical draw result, right? Normally, 9 times out of 10, 99 times out of 100 really, historical grades just don't move stocks. They just don't. In this case, copper is a hot commodity at the moment. The copper price is booming, and you've got a perfect scenario here with you got perfect grades, perfect intercept, perfect shallowness, and you can't ask for anything better. You really can't. This is a spec trader's wet dream, if these were not historical. So I'll probably keep an eye out on this stock and see what happens in the near future, and possibly find a buy opportunity should it swing to the downside in the coming weeks. And that's pretty much it, guys. Hope you learned something. If you did, hey, hit that sub button, helps me out a lot. Cheers, guys.